Let me share a few public benefit corporate examples. There's Norway's Government Pension Fund Global, GPFG, commonly known as the Norwegian Oil Fund. The GPFG is one of the world's largest sovereign wealth funds. While it primarily invests in stocks, bonds, and real estate worldwide, it does hold significant shares in numerous large corporations across the globe. The fund operates under ethical guidelines set by the Norwegian government and is known for its transparent investment practices. China's Investment Corporation, CIC. This is China's sovereign wealth fund, established to manage part of the People's Republic of China's foreign exchange reserves. CIC invests in a wide range of assets globally, including large stakes in multinational corporations. Its investments are often strategic, focusing on sectors that align with China's economic and industrial policies. Abu Dhabi's Investment Authority, ADIA, is a sovereign wealth fund owned by the Emirate of Abu Dhabi, founded in 1976, and is one of the world's largest investment funds. ADIA manages a global investment portfolio that is diversified across more than 24 asset classes and subcategories. It has significant investments in various corporations around the world. Qatar's Investment Authority, QIA. This SWF is responsible for managing the reserve funds of the state of Qatar. It has major investments in companies across various sectors, including Barclays Bank, Volkswagen AG, and others. The QIA is known for its high-profile investments in European and American companies. Saudi Arabia's Public Investment Fund, PIF, is one of the largest sovereign wealth funds globally and is the main investment arm of Saudi Arabia. It holds significant stakes in both domestic and international corporations, playing a major role in diversifying Saudi Arabia's economy away from oil dependence. The PIF has been increasingly active in international markets, including significant investments in technology companies. And Kuwait's Investment Authority, KIA. The KIA manages the assets of Kuwait and has significant holdings in various global corporations. It is known for being one of the first SWFs and is a major investor in European and U.S. markets. These funds often invest in corporations for assorted reasons, including diversification of assets, generating returns for their respective countries, and sometimes pursuing strategic economic or political objectives. They typically operate with a high degree of professionalism and are increasingly important players in international financial markets. The Alaska Permanent Fund Dividend, PDF, is a little-known, or discussed, unique program in the United States that distributes a portion of the state's oil revenue to its residents. This dividend is a direct result of Alaska's substantial oil reserves and the establishment of the Alaska Permanent Fund, APF, which was created to ensure that future generations of Alaskans would benefit from the oil revenues. The Alaska Permanent Fund was established in 1976 after the discovery of oil on Alaska's North Slope. The goal was to transform non-renewable oil assets into renewable financial assets. In 1982, the state began distributing a portion of the fund's earnings directly to Alaska residents in the form of an annual dividend. This move was largely motivated by the desire to give Alaskans a direct stake in the state's natural resources and to help offset the high cost of living in many parts of the state. How the Alaska Permanent Fund works. The APF receives a certain percentage of the state's oil revenues. This money is invested in various assets to generate returns. The dividend amount varies each year, based on the fund's performance. It is calculated using a formula that averages the fund's income over several years to smooth out the annual fluctuations in market performance and oil revenue. To be eligible for the PFD, one must be a resident of Alaska for a full calendar year and intend to remain in Alaska indefinitely. There are also other eligibility criteria related to criminal convictions and absences from the state. The amount of the PFD has been subject to political debates, especially in times of low oil prices or when the state government faces budget deficits. In recent years, there have been discussions and actions taken to cap the dividend amount or modify the formula used to calculate it. As oil revenues have become less predictable, there's been more discussion about the need to diversify Alaska's economy and the sources of funding for the PFD. The PFD has had significant economic impacts in Alaska. It can be a substantial part of individual and family income, especially in rural areas. The dividend has also had social and political implications. It is a point of state pride and political interest, and changes to the dividend formula or amounts often become key issues in state politics. The Alaska Permanent Fund Dividend is often cited in discussions about universal basic income and resource wealth distribution. It's an example of a government directly distributing a portion of natural resource income to its citizens, an approach that has been debated and studied by economists and policymakers around the world. Sean Fain, president, UAW, observed, "There's a billionaire class, and there's the rest of us. We're all expected to sit back and take the scraps and live paycheck to paycheck and scrape to get by. We're second-class citizens." If these trends are not constructively addressed, and quickly, America will break into three socio-economic classes: a very small uber class of the very rich, a small highly trained technologist class, and a massive service, or servant, underclass. This is an inexorable economic fact of life, unless an alternative economic model is enacted. If not, the United States will soon be like feudal England or imperial Rome, home to a few ultra-rich, to some highly trained specialists and technologists, and to vast millions of peasant poor. In the past, there have been three possible paths to reverse similar trends. 1. Citizens complained, but nothing changed because the rich used the media, police, and military to suppress dissent. 2. Populists organized and voted for legislate changes. Or 3. Violent revolutions erupted, overthrowing the ruling class. It is this transnational corporate consolidation of power, their control of the mass media, and their super-citizen political influence, that threatens the very future of the American dream. According to data from Statista, the total market capitalization of the top 25 U.S. corporations increased significantly over the past decade. In 2010, the combined market capitalization of these companies was approximately $6.5 trillion. As of October 2021, the total market capitalization of the top 25 U.S. corporations was over $14 trillion, more than double the value of a decade ago. This growth is due to several factors such as increased profitability, expansion into new markets, and successful mergers and acquisitions. I propose taking the most useful aspects of existing PBCs, sovereign wealth funds, the Alaska Permanent Fund Dividend, PDF, the organizing principles and practices of transnational corporations, to dilute and marginalize the alpha network's power. We do so by optimizing the best practices of these models, and synthesizing them to create a powerful, democratic, and patriotic metacorporation of our own. Simply said, we Americans could pool our assets into our PBC, then invest $7 trillion to purchase a controlling interest in the top 25 American corporations. We would need to invest no more than $10.7 trillion to control the top 50 companies, and no more than $21.8 trillion, 63%, to control all the top 500 companies. Some ideas for initial funding sources and operating models include: redirecting federal natural resource income. When companies extract natural resources on federal or Native American lands and waters, they pay royalties, rents, bonuses, and other fees, much like they would to any resource owner. The Office of Natural Resources Revenue, ONRR, collects and disburses these revenues. In the calendar year 2022, ONRR collected $22.25 trillion from federal sources and $1.66 billion from Native American sources for a total of $23.91 trillion. All these natural resources belong to we the people collectively because the United States is a representative government. If it were ever liquidated, all its assets would belong to our citizens equally. Offering PBC fund investment option in retirement plans. According to the Federal Reserve, the total amount of retirement savings, retirement accounts include 401k plans, individual retirement accounts, IRAs, simplified employee pension, SEP, plans, and KEO plans. Additionally, the aggregate does not include retirement pensions or Social Security benefits. In the United States was approximately $35 trillion as of the first quarter of 2022. The first American PBC could be established as a tax-free retirement fund option for any type of retirement savings account. If Americans invested only 20% of their accounts, the PBC would be able to buy a controlling interest in the top 25 corporations with those funds alone. We could use debt financing. Our national debt is secured through the issuance of various types of securities, the most common of which are U.S. Treasury bonds, notes, and bills. These securities are sold by the U.S. Department of the Treasury to investors, both domestic and foreign, to raise funds to finance government operations and programs. This means that investors have confidence that our government will honor its debt obligations and make timely interest and principal payments. The U.S. national debt is considered completely secure because it is backed by the full faith and credit of the U.S. government. That's us. We're the ones on the hook to pay all the interest and principal monies that are overwhelmingly funneled into the pockets of the alphas. As of September 2023, the United States had a national debt of over $33 trillion. Borrowing up to an additional $7 trillion to fund the first American PBC would not only be possible but preferred. That is because we would start shifting the debt secured by us into our own hands to invest in ourselves. I agree with what Michael Moore said. The kind of America I want is one where everybody, and I mean everybody, gets a fair shake. The funds raised through resource revenues, savings investments, or debt obligations would be more than sufficient to cover various first PBC startup funding, equity purchases, operating expenses, and monthly dividend distributions to every American stockholder citizen. The first American PBC managed like a sovereign fund, an investment fund, and a blind trust, could do what the ultra-wealthy do: own the lion's share of a phenomenally successful and growing transnational metacorporation. If there is an existing corporate model for our PBC, it is General Electric. GE has a sustained, proven success record as America's premier diversified transnational corporation. The company's profitable diversified divisions include aerospace, power, renewable energy, healthcare, digital, additive manufacturing, venture capital, finance, and research. General Electric annual revenue for 2022 was $76.555 billion, and a market capitalization of $121 billion in 2023. The GE business strategy best exemplifies what I recommend as the PBC investment strategy, and is an application of the Pareto principle. In 1906, Italian economist Vilfredo Pareto created a mathematical formula to describe the unequal distribution of wealth in his country, observing that 20% of the people owned 80% of the wealth. Quality management pioneer, Dr. Joseph Uran, working in the U.S. in the 1930s and 40s, recognized it as a universal principle he called the vital few and trivial many. The principle, that 20% of something always is responsible for 80% of the results, became known as Pareto's principle, or the 80-20 rule. The 80-20 rule means that it is often the few, 20%, who are vital, and the many, 80%, who are trivial. Ashby's law of requisite variety, initially used to describe genetic pools and biological adaptability, states that the more choices or options an organism, person, or organization has available, the greater the likelihood it will be successful in achieving its purposes. As it relates to competitiveness, it is unequivocal that the side with the most resources and capabilities will be victorious. That is how wars are won, species adapt, societies change, and corporations evolve. As importantly, an egalitarian first American PBC could capitalize on its mega-sized superior requisite variety to work for the American people as stakeholder shareholder citizens, balancing our commonwealth and our general welfare. Ashby's law favors the transnational corporation over any existing nation-state because a transnational corporation has more requisite variety than a national government, i.e., it transcends national boundaries, political parties, and legislative authority. Another way to say this is that a transnational corporation has more flexibility and can outmaneuver a less robust institution.